Welcome to the QT Podcast. This show is where two LGBTQI plus tech professionals, entrepreneurs, and leaders share insights, challenges, and successes because queer innovators deserve the mic. I'm your first co-host, Nofel Testowny, CEO and co-founder of QueerTech.
And I'm your second co-host, Bobby Reset, chair of the board at QueerTech. I'm here as a queer founder who has raised capital, scaled a company, and lived the highs and lows of building in tech. I'm widely recognized as the first Indigenous woman to found, scale, and successfully exit a technology company here in Canada, Virtual Gurus.
In the fourth season of the QT podcast, we're sitting down with investors, funds, and founders who are reshaping what fundraising can look like for 2S LGBTQI+ and equity-deserving entrepreneurs. This season is bringing you live conversations from Fundraising Spotlight Series, an initiative brought to you by QueerTech's QT Founder Program. A huge thank you to our sponsors, Canadian Queer Chamber of Commerce, the Innovation Science and Economic Development of Canada, and TD for their commitment to driving innovation and inclusion within the QueerTech ecosystem.
We'll dig into how to pitch with power, build real relationships with investors, navigate term sheets, and access capital that actually sees your lived experience as an advantage, not a liability. We'll also talk about the emotional side of fundraising, resilience, identity, and staying grounded while you build.
Whether you're raising your first round, planning your next one, or just curious about how money moves in tech, this season is your guide to navigating fundraising as Queer Founder.
We talk with co-founders and managing partners Mandy and Douglas about what they really look for in queer-led startups, how they think about performance and impact, and what the current funding landscape means for early-stage founders.
Hey Mandy, hi Doug, how's it going?
Hey,
Hello, everyone. It's so nice to see you and be here, and I'm excited for this conversation.
Yeah, absolutely. Really excited to start here. Our one thing we do at QueerTech is we want our guests to tell their story. We don't read bios, we don't share bios. So, Mandy, I'm going to start with you. Tell us a little bit more about you. I know you're already known in the community, but for those who don't know you, tell us a little bit more about yourself.
Yeah, so I have a similar-ish background to Bobby. So I was an operator for many years. I actually started my first company in my teens. And so I've been doing this for a very, very long time, excuse me, on the founder side. So I spent many years in Silicon Valley, kind of did that whole thing, raised millions in VC there, saw firsthand the bias. And I think I knew from a really young age, which is not very typical in the VC world, that I wanted to sit on the other side of the table and make sure that capital was being pushed towards people that deserve it. Not saying that other people don't deserve it, but I think we know there's a lot of bias in this environment. And so I've sold a company, I've bought a competitor before, I've bootstrapped, I've been in many different industries. From regulated industries like cannabis and health tech all the way to marketplaces, B2B SaaS. So there's a lot of different experience in the last 15 plus years, which is also part of the reason why we wanted to stay sector agnostic, because between Doug and I, we have a lot of experience in multiple sectors, but we also didn't want to create more barriers to founders that already experience many. So yeah, I'm excited to be here to chat about this today.
Awesome. Thank you. Doug, tell us more about you.
Sure. Well, first of all, thank you guys for the invitation. We've been trying to change the ecosystem from the within, and I think this is a great first step for doing that. So, a little about myself. My background is in finance, CPA, Big Four trained, and worked about 20 plus years in the corporate finance world. So more traditional, having seen the other side of how the the large corp or Fortune 500 companies work, and notice the bias from the other side as well in terms of how they decide to invest capital, who they decide to invest in, what sort of products they're looking for. So good and bad, obviously. The positive side is I have insight, being able to have made decision on that side, but on the downside or the con side is that there are so many missed opportunities because of the sort of people that they look at, and they do not decide that they are resonating with who they are simply because they're different. So, Mandy and I decided to start on Misfit Ventures to put the capital where they should be, and particularly in the LGBTQ community, which has traditionally outperformed their peers in terms of number of jobs they created, in terms of exits that they have done to the innovations that they have made. And in many ways, it is in line with the macro environment right now, where we want to focus on the Canadian innovation and tech ecosystem. So I think this is great timing.
I'm going to add one quick thing because this is a really good example of something that is not frustrating to me, but I find so interesting is that we underplay our backgrounds, especially when you come from underrepresented communities. And so Doug does this too. And I sometimes do this as well, where I'm like, Doug, talk about the fact that you were just in New York for your first investment that went public. Like Doug has an amazing background in BC. But we're very, very humble as coming from marginalized groups. And this is something that I always push founders to do is if you're one of a few people that can do this in the world, that's the first thing I should know.
Yeah.
And we'll get into that more later, but this Absolutely. Is a little on topic.
Yeah, I love that. I love that. Yeah, that's really, really important. Awesome. So let's kind of dive into it. Kind of like today we're thinking about kind of, the way to frame the conversation is talk to you about three things. We want our listening to understand what is Misfit investment thesis, what are the things to look at when you're evaluating startup, looking at the performance, the impact measurement, and then, look at your crystal ball and tell us what you predict for 2026 or what does the market looks like for 2026. So, so kind of like really dive in with my first questions and thinking about can you break down a little bit what are your core pillars for the investment thesis and how you think about it?
Yeah, so I'll talk about our thesis generally. So we invest in mostly Canadian companies. Probably about 60 to 70% of our fund will be invested in Canadian companies. The rest will be international. That will likely be a lot of US companies. But what we're seeing right now is a really interesting sort of reverse brain drain where a lot of US companies, because of what's happening politically there, are looking to move here, especially when they're from marginalized backgrounds. So we're seeing that it's not as safe for queer people to be there, people of color, that sort of thing. On top of that, a lot of the industries and sectors that we really care about in Canada, such as climate tech, life sciences, are being defunded right now from the government. So we're seeing a lot of companies, whether it's on the personal side, business side, wanting to move here. So I could actually see a lot of our investments being higher than just 60 to 70% Canadian due to that. We are, like I mentioned earlier, we're sector agnostic. So we do have a few verticals that we personally sort of are passionate about and that we see a lot of pipeline in, which is AI, of course, climate, life sciences, health tech. But that being said, we'll look at anything that looks interesting. We are seed stage, so we do generally need some form of traction. Obviously, depending on the sector that you're in, like life sciences, typically you're not going to have any revenue or anything like that, if ever. Yeah. But depending on your industry, we do want to see some form of traction, whether it's users, revenue, LOIs, something like that. I'll let Doug add on to anything I may have missed.
I look at things on the other side, and that's why Mandy and I are such good complement. So I focus more on the financial and also on the macro side, the economic side, and strategic side. So speaking of, Nathal, you had a great question about what we're seeing right now and foreseeing in the future. I think being Canadian in Canada, working in the industries that we up to, whether it's startups or clean tech, I think oftentimes we need to think about what true impact we're making to society. I think historically, either as a country or in many in the business world, we focus on more short-term economic or even just purely monetary benefits. I've been so many VC forums and so on panels, and everyone just looking at when you're going to reach $50 million revenue, $100 million revenue. There are a lot more things than just reaching a certain number. I think people need to be passionate about and truly invested in the product they believe will create value. Whether it is a simple, even consumer products to a certain code they can create within the generative AI that can truly change things, and the revenue will come. I think what we're seeing right now is a reset globally. Obviously, everyone's pushing into AI because of a lot of the spend, but as we see, whether it is in the US or in Asia, a lot of these are going into pure investment, and while we're not seeing immediate benefit, so I do want to people think about what they're creating is truly important, that will change things for longer term. So yeah, focus on what you're selling, what you're making, invest yourself in it, be passionate, and the rest of the equation will come.
I love that, Doug. One thing that you touched on about revenue, people or VCs will say are often looking for 50 million, 100 million revenue. And, it's there's time to face that as early stage startups, we're not all unicorns, right? Like we could be, I like to say that, Virtual Gurus was a unicorn. We were born to be a unicorn, but we're never going to hit the unicorn status. And so shifting to how you find the high growth companies that fits your thesis, everyone tracks the standard numbers, but you're finding companies that are missing. The traditional venture due diligence tends to prioritize problem matching, which we know often excludes underestimated founders. And when you designed Misfit's investment approach, what gaps did you see in the traditional VC model? And following up with that, what non-traditional signals or founder attributes do you prioritize that help you identify exceptional companies early?
I can start. So I think that, like, when I think about like non-traditional signals, I'm going to answer that part because I'm pretty passionate about that. And a lot of it is how founders take feedback. So we were just talking about, being passionate and being really, like this is your baby, right? So you really need to take care of it. You need to be passionate about it. But there's also a lot of ego that comes with that. So a lot of times people think that they know best because it's their baby. They've been doing this for such a long time and they have a really hard time taking feedback. So prior to us even looking at an investment, there's certain things that I don't like using the word test, but I'll test founders with, and certain questions that I'll ask that'll show me how well they can take feedback and what they do with it. And so attached to that, what's really important to me personally, and again, Doug and I come from such different backgrounds, and this is why I think we work so well together. And so he'll probably have a very different answer. Is transparency and honesty. So because I come from a founder background, I've been surrounded with thousands of founders, and I can smell bullshit from a mile away because I've been the bullshitter before.
Yeah.
And so when you're telling me projections that I'm just like, there's absolutely no way you're going to hit that. Like, it's just not realistic. It can be frustrating because we can see through that. And so when founders are more honest and transparent about where they're at or where they plan to be in the next, let's say 12, 18 months, we can see that. And that's how we also know our relationship's going to work too, right? Because this is going to be a very close relationship. And another thing that founders also do is wait until it's too late. So if they're running into issues, whether it's cash flow, staff problems, whatever it might be, they try to keep that away from their investors. And it's actually really important to go to them early because those are the people that are literally invested in you doing well and are going to be the ones that are going to help you. And so I think there's like these little signals that you can kind of discover even prior to an investment, how a founder is going to be dealing with certain situations. And I mean, as like when you're investing early stage, of course the product matters and things like that, but up to 40% of founders in the seed stage are going to pivot. So you're really investing in the people and whether they're going to be the ones that are going to be able to pivot and make those changes, take that feedback, be honest about the fact that they're pivoting because this other shit wasn't working. And you can see those signals pretty early. It's quite clear.
Yeah. Yeah, I second that. I think too, Mandy, one thing, like you hit the nail on the head because as somebody who's had to go out and raise a lot of money, and I know it's out there that I went through 170 no's. And while I would like to say what those no's were geared towards, a lot of it was, did I build the right trust in them? Did I win them over with actually taking feedback and constructive feedback well? There were so many factors to it that I didn't know early on, and I got to learn later on in the journey. And so now I know that everybody was looking at, were they able to work with me, and would they be able to work with me in the future? So definitely.
Yeah, I look at it from a financial perspective, number wise. So, obviously we're talking about C stage. They don't have a lot of revenue, if they have any at all. But even whatever they have, it's still important for us to look at how they manage that. How there are companies we talk to that have raised maybe even $1 million, but then you notice that they have executive assistants. I mean, when you're making $100,000, and many know which ones we're talking about. So those are not good indication of how you are managing the company's finances. And in this day and age, I think since the a change, massive seismic shift in the VC ecosystem a couple of years ago with Silicon Valley Bank going bankrupt and having to be absorbed. Those are indications that the industry investment have been chasing a lot of hype. And same with the founders. And because of their following of these hypes, and they forgot the fundamentals. So it doesn't matter how big your house is, you just need to make sure it's clean, it's well ordered and managed. So whether you are going for like $5 million raise or $500,000 raise, make sure whatever you have, you are managing it well, spending on the right things. One thing VCs don't like to do is to fund operations. So if you want to ask for money, you want to make sure it goes into things that create values, whether it is product development or even marketing. Those things create long-term value. And the other thing is I always look at the patent value. Or IP side of things. So the company Mandy mentioned that just went public, my first investment. First thing I did when I went on the board is to commission a study of the total IP value on the company. And because the company is already raised over $200 million US at the time. And I said, well, how much is it worth in terms of the patent that we created? It was more than that. So those are key indicators as to how valuable your company truly is. And I want founders or people who are thinking about founding a company always keep an eye on the true value of the product, and also whatever money they have in the bank, they manage it very carefully because there's no money better than your own.
Yeah.
Yeah, you're gonna see a trend with Doug and I where one is more qualitative, one is more quantitative, in how we look at things, which I think is awesome that we have that mix. But you'll also see that, so even with Doug saying investment shouldn't go towards operations, because I come from the founder side, I understand what that's like, and a lot of founders will say, this is how I'm going to use the investment. And this also comes back a little bit to the honesty part. It's like, I know you're going to use it for a salary, and that's okay because we all are humans that need to keep a roof above our heads, and we have families and things like that. But let's be realistic about what that salary is going to be, and let's talk about it. And so I have this like founder empathy about things like that, where I'm like, it's okay to use some of the money for that because that's the only way you're going to keep going. Otherwise, you're going to quit and you're going to go get a job because we need to survive. But like Doug mentioned earlier, there is founders that we've come across where they're using that capital for executive assistance for themselves when they're like a 2 or 3 person team, and it just makes absolutely no sense. And so seeing things like that will be, even if we were in love with your idea, we would never look twice at it.
It's a flag, right? It's a flag. Yeah. And, I, on my own experience, though, for me, I actually didn't pay myself a salary until 4 years in. I bootstrapped it to 1.8 million in revenue, and I paid the employees' salaries, and I just lived on EI. And I know that my team and my investors looked at that as, okay, we're investing in the right person. And so now that I'm starting to invest, so that's exactly what I look for as well. So I appreciate that.
Yeah, that's really important. I think a lot of founders, if they're not paid and have a financial stability, then how can you grow the company, right? And focus on the company. And one of the things both of you, Doug and Mandy, touched on is like, because looking at financial performance, we know a lot of VCs do that, or a lot of funds look at that. But you also have the impact side, right? That you look at, and so in our case, a lot of founders bring, some deep intersectional lived experience, right? And so, especially to the problem they are solving, we hear so many stories in the market how many women would bring a problem to like VCs who don't understand like the problem, right? And so they don't understand the market. And so like how does that influence like your evaluation of the opportunity? And is there also like a framework to how you assess or metrics that you look at in terms of evaluating that impact, that of the company?
Yeah, so I have a lot to say about what you just said, but to start is like thinking about what the problem is in
Yeah.
VC is there's a reason why we see, I think it's, I don't know, in the low 90s% VC being white men. And then you think about the people who are getting funded, and it would be a similar percent of white men. And it's because we invest in what we're comfortable with, right? So just like you said, if a woman brings a period product to a white dude VC, he's probably going to be like, I don't really get it. Is this market big enough? Do we really need this? You only need one tampon for your entire period cycle, right? Like they have no idea what's going on. And so like we invest in what we're comfortable with. So I don't even actually blame the environment that we've created. I do to a certain extent, of course, but I don't because I understand it's the same thing as us. It's like we want to invest in queer people because that's what we relate to. That's what we're comfortable with. We want to help people like that. And so how the only way to change this is actually like from the top down. And that's starting with like our investors, like the LPs. We need them to look diverse so that they're investing in diverse GPs who are us. And then they're going to be investing in diverse founders. And that's the only way to actually create structural change within this ecosystem. Otherwise, it's going to continue being the same. It's the same if you look at the percent of the next largest like subset of VCs is Asian men. And one of the next largest subsets of people getting investment is Asian guys, Asian founders, right? And so it makes sense. Like we can't argue that that doesn't make sense. But we need to. I don't even know where I was going with this. I was probably just trying to bitch about something that bothers me. But in terms of like metrics, and I'll let Doug talk about this too because he worked a lot on building out that framework. But impact is of course like a big part of Misfit's duty. Like we know that DEI strengthens like decision making. It expands markets. And of course we track this because it's predictive of like better performance, not just because it's like charity work, which some people see it as. So in terms of like metrics that we'll actually be tracking, I mean, Doug, maybe you want to take over here.
Sure. Speaking as the Asian man in the room. No, it is true. It is what it is. And I do see that. And you know what the easiest thing for me to do? And just pretend I'm that straight Asian man. And the law is, Asian, like white dude does the same thing. If they are gay white guys, they end up working with the straight white guys because that's the easiest way to enter. And needless to say, there are so many of them out there that we know right now who did exactly that. So yeah, it is about investing in what you're comfortable with. So there are two ways going about it. One is making those changes structurally, like Mandy mentioned, which I think is the right way of doing things. But meanwhile, in short term, we can start working with people who share some of these characteristics who may or may not fall into the normative field of what is perceived as the VC environment. That's another way, just to working with the allies per se. So in terms of what we do for these startup companies, so we have a very extensive due diligence process, and that is for two reasons. One is because the institutions who we work with or came to us are very large institutions. They have very high requirements and standards that we need to follow. So that's one. But the other side of it is through that process, we want to benefit the founders, that they understand these. It's almost like a training. This is what you're going to have to go through to get to the second round. So some of the founders we work with end up not getting our investment, but through that process, we'll give them guidelines, almost like this is to-do list. When you finish that, come back to us. So as part of that exercise, we also have an amazing community roster of experts, or what we call SMEs, by discipline, by sectors, who are able to advise us during that due diligence process, who may, after the fact, become some of the fractional folks. So what we're trying to create here is quite unique in terms of the VC world, and thanks to the queer techs and other queer organizations like CGLCC will be able to, or CQCC will be able to keep that ecosystem thriving, and whoever they are in terms of founders, whether they end up getting our investment or not, they will benefit from the larger ecosystem.
Yeah.
Yeah, Doug is really, really, and I'm not donating his time to anyone that's listening, but Doug is really amazing at sitting with founders and going through like very intense little details and giving them feedback. And again, not donating his time. We have very limited time, but that's something that we want to provide, right? To a certain extent, is even if we're not investing in you, like we still want to create this change and we still want to help people, because most companies aren't VC backable, right? And so we still want to be able to be like, okay, for you to, get to a point of maybe getting VC investment or angel investment or something like that. These are the types of things that you should be doing or looking at.
Yeah, and
Yeah.
and just to say also, like, I'm really excited when you say that, Mandy, because that's when we talked about building the ecosystem around queer founders. Is like that's the thoughts, right? Is like we want to bring in an army of people that can come and support this funding from a queer tech perspective, but also from a misfit perspective, and then bring in also other people like Bobby and them that have been succeed and can guide these founders.
Yeah, and it's so amazing how many people are willing and happy to help too, like allies. I'm not even just talking about queer people who have seen some success in whatever form. Like there is a lot of allies that really genuinely want to help and donate their time.
Yeah, and just from a founder perspective, what you're providing is not only so needed, but it's warranted. Like, I mean, I really wish you folks were around when I was in my early stage, because I didn't have that support, and I didn't have the just another queer person telling me and sharing their experience with me so that I could learn. Because I had to learn the hard way. I was just thrown into it all and had to figure it out and had no actual training or education on it. And so what you're doing is definitely needed. We all know that the market is tough. Actually, I was out raising and ended up actually accidentally selling the business. That's how tough it is right now, because nobody wanted to give money, but they wanted to buy the business, which is interesting. And for underrepresented founders watching, you have both spoken about diversity as an economic advantage. What data or early results from your portfolio reinforce this? And from your vantage point, which KPIs or behavioral indicators have proven to be more predictive of success among underrepresented founders?
I'm gonna let Doug go first because I keep taking over, but I have a lot to say.
Um, I'll answer the first part of the question in terms of our first investment. We made the first one a few months ago, almost a year ago now, with a life science company. So I have a very strong group of founders. The one that we spoke with, who is also the CEO of the company, he just exited another life science startup. He is original French Canadian Métis, and got a PhD in UBC, postdoc in Berkeley, highly qualified. And his co-founders are also people of color, women, extremely strong in their field. So that particular company came to us. That person came to us, me and Mandy, while we were in Los Angeles, because we work closely with the Canadian consulate based in Southern California. And he approached us for an investment. So looking at his background, looking at what they did at the time, which was already published on Nature magazine, which is one of the most prestigious scientific journal in the world, if not and New York Times. So we were wondering why he would come to us, because we suspected that his round's already full, and it was full. With like legendary VCs like SoftV, which is one of the largest life science VC, Wilson Sonsini, which is the legendary law firm of Silicon Valley, etc. But one thing that really spoke to him about us is like this sort of conversation. that we truly appreciate and understand who he is, what his founder faces as underserved and minority community, and the challenges that he would face going forward. So he reserved a certain percentage on the cap table for us. And since then, we've been following his progress. His latest round, he closed with some of the largest VCs in Silicon Valley, including Draper Associates, at 4x the value that we invested in. So I think what we looked at always is number one, and I think that part Mandy is going to agree, is the founders. It's always the founder you're investing in, as because like 40% of the company pivot. Secondly, to me, is again going back to the technology and the value of the product. I'm not looking for a fast exit. I'm looking for more patient but longer term true value. And something like a life science, a revolutionary technique or technology, have true impact to society, to the industry, to the sector, to humankind, and it will eventually be worth a lot more. And that's what I always look at, and it has proven right.
Yeah, that founder story is really key. And this is something that a lot of founder forget. Mandy, if you remember the first pitch we did together a couple of years ago, how founders, they would come and start the pitch and they just go in the company. It's like, tell us your story and how you connect, because that's really what you're selling. It's not the product that you're doing. It's the
Well,
company.
that's what I was even saying at the beginning. I was like you would literally find out at the end that they were one of 5 in the world that could do this, and I'm like, start with that, because now I'm already kind of bored. You know what I mean? But like, start with that, and you will have my attention the entire way through. Like, VCs hear thousands of pitches, right? So you have to capture their attention right away. You have to tell us why you're the person to do this. How it's going to change the world or change people's lives or whatever you're trying to do. That's the most important thing of any pitch. But I think so. When we go back to the question of like, why queer founders, why should we invest in these people? I think this is something that's already luckily been like, it's like a proven model, because we've done it with like women-led VCs, immigrant-led funds, that sort of thing. So it's starting to become a proven model. But I think a lot of people here have also heard the data with, queer founders create 36% more jobs, 44% more exits, and 114% more patents, which is amazing that this data came out. But then it also really showed us how much we lack in data. And so we're working with a couple of organizations to try to figure out how we start collecting this specifically in Canada, because any data that does exist, it's in the US, and that's already so limited. But we know that they perform better, right? Even if like there's a TechCrunch article that came out in the last year that showed that like it was like 70% of unicorns are like immigrant-led companies, something like that. It was a crazy number. We know that there's a different resiliency when it comes to people from marginalized backgrounds for lots of different reasons that I won't go into, because we've all have actually had lived experiences of that. But when we think about like our fund specifically, there's a lot of people, like they talk about like the friends and family round, right? That doesn't exist for a lot of people that come from this community. And so we want to be that gap that's able to fill that. So it's a mix of finding these earlier stage companies that may be first time founders but have so much potential, are showing amazing traction, are good at listening to feedback, willing to bend where they need to bend to make this successful. And then it's also a mix of taking these serial exited companies and also having that a part of our portfolio, because those are the companies too that are going to be able to help the other ones, right? We're creating like more than just this list of companies we're investing in. We're creating a database that's going to all be able to be an ecosystem of helping each other. And Bobby, you mentioned this in the beginning with like generational wealth. Like a lot of these communities, we don't experience that, right? And so you're a perfect example of that, where you come from a background where maybe you're not from I'm assuming you're not from generational wealth, but I don't know. Yeah. And then you start a company, you do well, and now you're investing in other queer founders. And that's exactly what we want to do. We want to invest in queer founders that are going to become investors themselves. And that's the only way we create this change.
Build the wealth within the community. Yeah.
Yep. Pay it forward. I'm part of a group of women who have exited now. And, 95% of the women that have exited are now paying that forward by now investing. And so I've just done my second investment and pretty excited, to get into it and jump into it a lot more.
Yeah, awesome. I know we want to move to Q&A, but we have a couple questions that we kind of keep brief in the next couple of minutes. So one is kind of predictions and looking at 2026. Like, there is a lot of shift in the landscape, right? There's a lot of questions founders have. So what are some of the shift you're seeing in the market for 2026? And especially, is there a shift for underrepresented founders that you're noticing in the market?
Doug, do you want to go? I again have a lot to say.
I
Sure.
love it.
I've been encouraging a lot of founders to start looking at things more strategically. So, of course, you have to focus on your products or focus on what you plan to do, what you're passionate about, and your own experience as well. However, we do work closely with a lot of larger institutions, particularly publicly. So, either provincial, federal, we do analyze the budget. For example, I was just going through the EDC budget coming in the coming year. They have a big roadmap as to where they focus, but also look at the whole Canadian initiative. This is actually a great golden window for Canadian innovators to participate in the capital markets because funding will come in specifically a few areas. So obviously AI will always be the number one right now, but making sure that you do have something of true value, not just another AI agent. Clean tech will continue to be a focus. Unfortunately, there are some news coming out about the non-clean side of tech, but I do believe that clean tech will continue to thrive, not just Canada, but globally. So the EDC side or other Canadian agencies will help you promote to the rest of the world. I was just on a call with someone from Hong Kong this morning. They have a forum coming up, just want to look for Canadian clean tech companies. And then thirdly, do look at life science. It's something that everyone's going to continue to look at, but do be prepared that it's a longer journey. You need to have expertise in the field. So I guess to summarize it, make sure that you, whatever you're doing, you do look at the bigger picture as to where the economy is going, because geopolitical and macroeconomic risk is going to drive the entire capital markets.
Yeah, I agree with Doug, like sector wise. Like I still feel really bullish on climate tech, even though there is some interesting articles coming out, of course, AI. I think one of the most interesting things we're seeing for our specific fund is what I was talking about earlier, which is that reverse brain drain. And I think we're going to see a lot of US and potentially um, other queer founders from around the world coming to Canada, which is going to obviously help with job creation specifically in our community because again we like to hire people that are like us, IP creation, that sort of thing. So I think we're going to see a lot more of that in 2026. I think 2025 was especially difficult in Canada because of the uncertainty politically. There was an assumption with a certain party coming in, which didn't end up happening. And so a lot of like the institutional funding dried up and stopped for a long time because everyone was just in like a wait period, like a caretaking period. And so that's part of the reason why, and again, this is like a trickle down effect, right? It's like if funding is difficult to get as a VC, it's difficult to get as a founder. And so I think that that's also hopefully, this is my hope, is that it starts getting a little easier now with fundraising, whatever side of the table you sit on. But I think we're going to see some really interesting things happening in the next year.
I agree. Maybe we'll have to do a follow up next year this time to see if your predictions are right because I agree as well. I know we're going to go into some Q&A here shortly, but just to wrap it up, for founders that are out there preparing to raise capital next year, so recognizing that maybe next year is going to be a better year, what should they be doing now to increase their chances of success and closing their rounds?
So VC is a long relationship game. A lot of people think that they are going to go and talk to VCs, get a check that day, and it's going to close. Bobby, and it's going to
Yeah.
close, and it's all done. It's a long relate, especially if you're investing in or getting investment in Canada. So start building those relationships now. That's the most important thing I would say. Even if you're not at that point, you can even be honest with VCs. Hey, we're not here yet, but I want to start the conversation with you because this is what we're expecting by, Q3, Q4, whatever that is. And so I'd like to can I add you to my monthly email that we send out, whatever it might be, or can we do a quarterly call? So start those relationships early.
Yeah, that's what I did too. Is I reach out to a ton of people and then get them into my monthly or my quarterlies, and then yes, go ahead, Doug. Sorry.
Oh no, I'm just gonna agree with both of you guys. It's a long-term relationship. I'm not volunteering my time too much here, but one of the main mission of what we do in Misfit is to empower queer founders. So to the extent possible, we'll love to hear from you. We do love to be able to help or even connect you with the right people. And it is not going to be an immediate thing. So I have seen and spoken with founders where they had different expectation. It turned out to be, a gap, and that's not good. So make sure that you are ready to, when you present, make sure you have something that you want to do, that you need from us or from other VCs, and be ready to do it for longer term. Just one note about picking the sort of investor. I know everyone wants to have investors and believe that they will help them power the engine, but keep in mind sometimes investment could also function as a debt, because not necessarily in a technical form, but the relationship. There are VCs where the values are not aligned, or investors who are looking for very different level of profit in a very different timeline. You end up having to spend more time than what you actually get financially. So just make sure there's a value alignment, there's expectation alignment, and be ready to be in it for long term.
And with that, Doug, one thing that I always say, when I mentor people who are just getting into their first raise, is it's okay to do your due diligence on the investor just as much as well, right? So if you don't fit the values, it's okay to say, hey, thank you so much, but you're not the right fit for me. And it's okay to say that as well. It goes both ways, right?
100%, 100%. Yeah, Altam, I see that we have some questions coming up. I know the first one is in writing. The person was not able to come on the mic. So I'm going to ask that question. It comes from Karina Com, and it says, we're trying to balance sharing our long-term vision with being honest about where we are today. We're in phase one with early signs pointing towards phase two, and we do have a phase three in our bigger story. I'm looking for the best way to communicate that journey clearly without overwhelming people. We're also wondering if phase two should be simplified, and how do we invite guidance in our pitch while still keeping the listener confident in our direction? Great question.
Yeah, so I think when it comes to story, this is essentially the storytelling piece, right? It's I just always go back to honesty. So it's like you have to be honest about where you are, where you're going to be, and how you're going to get there. When you say overwhelming, I'm going to assume that you are trying not to overstretch or make it seem like it's something that's unbelievable because of where you're currently at. Unfortunately, that's generally the case and what it can look like to VCs. So that we can see right away whether or not this is something that's actually viable. So if you're talking about where you're at now and where you're going to be in a year, let's say, it's pretty easy for us to see whether that's going to happen or not. Obviously, it's sector dependent. So if it's a sector that we don't specialize in, then we would probably have to get someone else to come in and help us a little bit with what that looks like. But typically, we'll see right away.
Yeah, just to add on to that, I have worked with a lot of founders who believe that, first of all, what they have is very unique and they don't want to overshare because of confidentiality. So that's the number one myth you probably need to get out of your head. Whatever you want to do is likely being done by someone somewhere at another time. So just tell the story the way and secondly, just be who you are and be transparent, because if this is going to be a long-term relationship, don't try to fit in what you think is the right thing to do. It's like on a date and just look completely different than who you are in person. unless it's for a very short period of time. If you're in it for a long-term relationship, just be upfront. Like Manny said, most VCs have seen so many founders, they can see through right away. If they feel like you're not telling the whole and complete truth, the conversation will last very short.
Yeah, absolutely. Awesome. I think this second we have another question coming from Yazan. Hello, Yazan. How's it going? Good to see you.
Yeah, good to see you too. My name is Yazan. I'm the founder of Voxhaven. It's a LGBTQ community for storytelling, peer-to-peer support, and resources. And in the future, we'll have events as well. So that's the idea. Um, the question is basically we're rolling out our private beta, our beta for the digital LGBTQ plus Haven. So we're at very early stage, like pre-seed. So what specific signals of engagement that would like impress you as VCs um, in for our community growth, like users retention or like users like the number of users that use our community?
I mean, both matter, but I would say retention because you can have massive growth and then everyone leaves and ditches your company, right? And so I would rather see a company that has less users, but these users have stayed on for a year or two and they're massive supporters of your brand and they use it every single day and that sort of thing, than to see a massive spike in user growth and not know what's going to happen with them.
And the other thing would be engagement. I think these days, especially when you start, I assume that you collect a lot of data from the users, and that's what's going to drive your whole model. What do they look for? So you need to make sure that you have the engagement, but even within the engagement, you want to make sure you track the right metrics that would be truly beneficial to your long-term product development. Definitely don't just chase new users because assume it's a free platform right now. Right? and if
Yeah,
it's
of course.
yeah,
Yeah.
the minute you start charging, you will see things very differently. So make sure you keep them. Again, same thing as what we've been talking about. Make sure you're providing value to your users, listen to your users, see what they need, keep developing new features to the degree that you engage them more and more. And then you can prove eventually when you're ready to go funding, you can show this is how I track my customers and this is how I fulfill the needs. This is what these needs going to in turn become economic value.
Something that founders don't do enough of is actually talk to their customers. So they make a lot of assumptions about what their customers want and need. And it's almost, I wouldn't say it's almost always wrong, but a lot of times it's wrong because we're almost too close to it and we're too passionate about it. And then it's that ego piece that comes in as well. So we need to be able to talk to them and get that feedback from our customers also to be able to make changes with our product, right? And so I've gone into so many companies where they assume an ICP and it's completely wrong, and we prove it to be something completely different. So spend a lot of time with your customers.
Yeah, that makes sense.
All right, we thank you for that. We have one more questions coming also from Rachel. So, what do VCs think about the potential AI bubble burst?
I I don't have a ton to respond to that, but I will say that if you're an AI driven company, it would be important to like sort of like stress test your unit economics, because what we've seen in the past is that generally in bubbles, people accept like a scale first, figure out the unit economics later type situation. But then once that correction hits, the only companies that actually survive are the ones that have created proper revenue growth, sustainability, long-time users, that sort of thing. And so, yeah, that's one of the things I would add.
So we do see a lot of AI, and we keep mentioning it. And I do agree with Andy and Lana that it is a bubble in the sense. Oh, it is time to mention about bubble at least. So specifically, I do not look at agentic AI. I do not want to spend time on people telling me they have trained AI to do certain work. That is a field that can be done in many places at a low cost, and it is very short term. So generally, I will look at native AI. I will look at quantum computing, which I believe, to me, fundamentally, is much more valuable than AI because it's going to be the hardware side. And I think Canada, particularly in the West Coast, as well as East Coast, we have a lot of success stories like D-Wave to Photonics, and these are companies that have really captured it, not just to ride the wave, but you want to be the one creating the ripples. So make sure what you're creating is unique, is not just to use some platform that already exists. And the last bit is I do see an interesting part of cultural AI because AI has this ability to change culture. So I see a lot of new projects coming out from particularly Silicon Valley about how to manage the culture in AI. How do you create sensitivity? And I think it's something that's worth exploring for our community because AI can be used in many different ways and it can create misinformation, which we've seen already. So how do you monitor and manage that? So yeah, something new, something different, something going to be a fundamental change.
Mandy, Doug, this has been an incredible conversation, very insightful. I love that you said something in the beginning about how queer founders outperform the market. Also, we've seen some of the data that's coming in, and it's really just a great message to pass to the venture ecosystem in general that we're here and that we perform the market. So it's really inspiring to hear that.
Yeah, absolutely. And, I know we've had a couple talks before, and I could talk all day with you folks. So, thank you so much for sharing your journey here today and your blueprint for inclusive capital deployment.
Yeah, thank you both for having us. That was great. And our LinkedIn message box are always open to founders. Sometimes I'm not the best at responding quickly, but they're always open.
Thanks for joining us for this episode of the QT Podcast, inspired by our QT Founders Fundraising Spotlight series.
If you're a queer tech founder, check the show notes for links to our QT Founder Program, Misfit Venture Pitch Form, and other resources to support your fundraising journey.
Give the QT Podcast a quick rating and subscribe. You can help us reach more queer and tech professionals in need of support.
Until next time, I'm Nofel Testoni.
And I'm Bobby Reset. Keep queering the tech ecosystem.